Hello and welcome to today's live webinar where we look at the ASX investment opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Up on screen, if we have a look at the US market here, we'll start today by just having a look at the US indices. We'll have a quick look at the XJO. We'll go through the recent ASX signals, identify the preferred opportunities. We'll review sort of the performance of the recent high conviction ideas and then try to set up a number of trades and levels that you want to be keeping an eye on going forward. But I think we're certainly in a very interesting point in the market at the moment. When you look at the graph up on screen here, the NASDAQ, and specifically what I'm referring to is we're seeing June quarter US earnings for S&P 500 companies come through, and the market had very high expectations following the tax cuts at the end of last year and synchronized global growth, and the forward expectations for 2018 earnings were for roughly around 20% earnings per share growth, and much of that was supported by tax cuts, share buybacks, and about 8% true underlying earnings growth in the US. So the question then becomes, well, once those factors are already out in the open, what does forward earnings growth look like into 2019, and does that support the high PE multiple? And on average, tech stocks are trading up at around 20 times forward earnings, and the rest of the S&P stocks are roughly around 17 times earnings. So high by historical standards, but the argument's always been in a low interest rate environment, you'd expect those PEs to be higher. But obviously there's concern that we are moving out of these sort of emergency rate levels, and interest rates globally, and in particular in the US, are rising. So on balance, you would have to say that most of the good news was priced into equity markets at the end of 2017. And on probability, we're likely to see consolidation as a good outcome for the market. The Fang stocks, which I've spoken about, so the Facebook, Amazon, Netflix, Google, they've just started to, or reported at the end of last week. Amazon delivered a good result. Certainly Netflix disappointed, and so did Facebook, and that was responsible. So on this graph at the moment, this is what I want to draw your attention to, is we had a fairly large sell-off in the NASDAQ. Now, in percentage terms, relative to how strong it's been over the last 2 years, it's minimal, but questions are being asked is, for the most part, the PE is not that excessive for the technology sector, but that sort of Facebook, Amazon, Google, so on, and mainly impacted by the likes of Netflix and Amazon. They're on a forward PE ratio of about 120 times earnings, which is extraordinarily expensive. So the concern is, do we see a crack in those valuation assumptions on those stocks? And if that happens, could we see the sort of NASDAQ come back down and test the lows of only the lows of earlier this year? So it's not unreasonable to sort of think that that type of movement could happen in the market. So for me, that sets a scene where I think just a little bit of caution across the way we price equities or identify price targets, and that'll be kind of the theme for today's recording. Let's just move through the rest of these indices and we'll have a look at what's happening here. So this is the S&P 500. So this was the peak in January, had a 10% correction. We've had slowly a rebuild of confidence over the last few months, but again, where we're sitting here is probably pretty close to full value, and if we have time in today's recording, we might just move through the Dow 30 stocks just to sort of give you a picture on sort of those leading US companies at the moment as well. But my expectation is that we get a longer period of consolidation than the market's expecting, and it may be that we get to the back half of this year and we really are sort of still at around sort of 2,700 points for the S&P, or around 25,000 points in the Dow. And what that will do is allow earnings to catch up and bring those PE valuations back. So here's a graph of the Dow Jones. So same thing, early January, 10% sell-off, rallied back more than 50% of it, came back down, retested the lows. And really, I think about this more of sort of just a consolidation range. I don't think we're going to go up and take out these highs anytime soon. And we probably get a prolonged period sort of within that average between that peak and trough there, which is about where we are, 25,000 points on the Dow. Here we are, the XJO. Now, our index has done very well. We've had a recovery in the banking stocks from oversold conditions, but they're making lower lows and lower highs. We'll look at that in today's recording. We've had a terrific recovery in resources, but with the issues in the around trade tariffs, the one argument might be that China will respond by increasing their stimulus or credit supply to infrastructure projects to make up for any slack that's created on the export side of their economy. And if that is true, then that will obviously be bullish for commodities. The flip side of the story simply is global growth slows down as a result of global trade negotiations, then the probability of commodities moving higher is limited. So I probably just form a view that we assume that iron ore prices and most of the metals are at or near full value. Maybe there's a little bit of upside within sort of oil and natural gas from these levels. But again, for the most part, I think we're better off thinking about the market as being pretty close near full value where we are at the moment. Okay, so let's go into the watch list. We'll come down here, select on ASX recent signals. Let's click on the first one in the list. Go to the toggle arrow to adjust. You can use your mouse wheel to roll the chart in or out. You can hold it down to drag it. And then you can simply start toggling through the recent signals. Now, A2 Milk's had a substantial retracement back to here. We've had the algo buy signal at around this 975 level. I just point out that you got a price gap back down to about 881. I think it'd be good buying if we saw it test that sort of 880, 890 level, and you might want to keep A2 on your watch list for that reason. Amcor, so this is Amcor's a stock that we like, and I've spoken about this continuously over the last number of years. I think the long-term fundamentals for Amcor bode well. We've seen the stock added into the ASX Top 20 index. They've had a little hiccup at the moment through, I think, taking costs from rationalising their sort of 4 or 5 year spree of bolt-on acquisitions. They've had higher input costs with resins and so on that are used in their products. And we've seen the earnings growth rate go from 8 to 10% per annum, but pretty much down to flat or no earnings growth. But it's probably a lull, and I think you start to see 1, 2, 3 years out, the company return to sort of something maybe even around a 6% earnings growth. But on a 4.5% dividend yield, it's attractive. Now, the stock got very oversold here at $13 on the back of the company making those announcements that they were not delivering earnings growth, but we're gradually starting to see a recovery from that. We don't have a higher high and a higher low. In fact, it's the opposite. So we've bounced back from these oversold conditions. So we're seeing an algorithm sell signal. And for anyone that was buying the stock down here, it might be an opportunity just to take profit at the moment. But I think the correction to the downside will be shallow, and we'll look for the next buy signal. But for clients that are patiently holding this name, when you look at it, it's really moved sideways for the last couple of years. We've predominantly been selling covered calls over this, sort of turning that 4.5% yield into sort of 10 or 12% cash flow. But the message here today is that I think between 15 and 15.50, Amcor becomes full value. In the back half of the year, if we see a minor retracement and an algorithm buy signal, I think it's a good opportunity to add Amcor into the portfolio. Not doing here on this one. Just to point out, this is a global bank ETF, so this gives you exposure to all the major banks globally. It's had a fairly substantial sell-off from $8 down to around $6.50. We're starting to see a recovery, and we've just got an algorithm sell signal. So when we think about the Aussie banks, let's just keep in mind that we've got that sell signal there at a global level in the banks as well. So here's an example of a regional bank, Bank of Queensland. Obviously, they're suffering higher cost of funding. You're seeing them raise interest rates out of cycle. And from oversold conditions, we've seen a bounce back in all the banking stocks. I don't think there's the earnings support over the next 1 to 2 years for this recovery to be anything meaningful. And I think you probably want to be keeping an eye on these more as a shorting opportunity in the market rather than really any compelling value proposition. Brambles, so same thing, oversold, rallied back. We've got the algorithm sell signal here at the moment. I think it's up against resistance. So it's either about taking profit or as a minimum selling covered calls to drive the extra return there. Evolution Mining. So this is one that I'd suggest you keep on your watch list, and I'd like to buy this at slightly discounted levels. It's had a pretty strong reversal today, but if we just look back here, this was kind of the old support range that the stock broke out from. So let's just say from 250 in round numbers to around 265. I think if you're able to buy the stock on a pullback anywhere near 275, I think these gold mining stocks is an area of the market that we're starting to see a number of buy signals come in at. So again, make a note of that around 275. I think that starts to creep onto the high conviction list. GWA, not doing here at the moment, but just pointing out that we've had the algorithm buy signal there. IPH, so a strong rally, filled the price gap to $5, and we've got the algorithm sell signal there on that one. Karoon Gas, algorithm sell signal. Mineral Resources, sell signal. MLD, not doing there at the moment. Mortgage Choice, just point out that there's a price gap back up to $1.82. We've had a sell signal here at 160, but if you're inclined to track this name, if we were to see price push back up towards the top end of that price gap, it might provide a good shorting opportunity. Myers, obviously long-term structural downtrend. The prior sell signals have done a very good job of picking up the peaks within those downtrends and provided some really good shorting opportunities. And we've just had another one here at around 45 cents, but not really something that we are too active in. Now, Crest, I like the way this is setting up. It's been in a 2-year consolidation range with roughly $20 being support. We've had the algorithm buy signal a couple of days ago at $20, and that was a day or two before their production numbers came out. The production numbers came out ahead of expectations. It looks like the company should deliver increasing production, leading to, all things being equal, gold holding stable, should lead to increased profits for Crest. And we're looking for the stock to eventually break out of this consolidation range and maybe push into sort of that $22 to $25 range. So I think you could be fairly aggressive on adding Crest to portfolios. If you want to put some protection in place, think about a stop loss below 1950. Net wealth. So this is one that I'd keep an eye on. This has been impacted among other things, but I think primarily the announcement of Bankers Trust rolling out a new platform to compete against the likes of Hub and Net Wealth and Premium and some of the other platform players in the market. And the pricing that BT's offering is at a substantial discount to where pricing sits at the moment, and the market's had a negative response to that as far as the pricing of Net Wealth goes. So this was a recent IPO that's performed well. The company's growing the funds under management. Hard to sort of know where support is, but I would think maybe somewhere between where it is at the moment and $7 probably gets oversold there, and look for a technical bounce higher in Net Wealth. Pushpay, we've got support there around $3.50. Shopping Centres Australia, we've had a buy signal here at around 230. So this is a yield sensitive name. Not really one of our preferred property plays. Sell signal here on SPL. Sell signal there. And then we are back to A2 Milk. So just to sort of recap on those notes then. So we say A2 Milk, we're interested in that at around 880, which will fill that price gap. Crest Mining, we like that stock at $21. And they were, I think, sort of the main two. Just recapping, going through those, that the rest are short signals, which I'll leave you to sort of make a decision as to whether you want to make notes of those, depending whether you look at the short side of the market. We do run a Saxo CFD platform if clients would like to work with us as an advisory capacity, looking at shorting opportunities in the market. And we work with a handful of clients around those type of strategies. So I think from the recent signals, A2 Milk and Crest are the standouts for me. Now, what I want to do next is go into the recent blog post. So the recent signals stores the last 7 days of algorithm signals. So if you've missed them on a particular day, you can come back in and toggle through that list at any point in time, and you're able to catch up on what the recent signals are. If you've been away and you haven't been reading the blog or keeping on top of that, you can come in, click on this, and this will give you a list of stocks from the last 30 days that we've posted on the blog. So I think this will sort of set the background for us to revisit the ideas that we've been covering in the prior recordings. So A2 Milk, sub $9, we're interested in that. AGL, we've had a sell signal here. Just to point out, it looks like both AGL and Origin Energy will probably come under some sort of regulatory pressure around electricity pricing, and I think that may weigh in particular on AGL's share price over the next 6 to 12 months. Origin's probably got a little bit more earnings leverage through their LNG exploration or their LNG processing in Queensland, where they're shipping record levels out of Curtis Island there. So I think, but nevertheless, the retail electricity side of AGL and Origin may be under a little bit of pressure. In saying that, I still think AGL delivers about 8% earnings growth, and maybe it's a good buy right, but just flagging that there is sort of this structural lower high through this $22, $23 range that the stock would, I think, remains under pressure. APA Group, this has got the takeover bid from the Hong Kong family company, $11 takeover price. I understand they're still finalising due diligence and waiting for the offer to be confirmed. But I expect sort of some announcement on that over the next week or so, so we'll continue to keep you posted on that. And then ultimately, it still faces Foreign Investment Review approval. BHP, we saw on Friday, I think it was, them announce that they've sold their onshore shale assets in the US for roughly $10.5 billion. We expect to see the most part of that capital return to shareholders through share buybacks. Otherwise, BHP is pretty full value where it is at the moment, and selling covered calls over it, I think, is the way to deliver extra return. Don't see too much more upside for commodities, where they are at the moment. Just to recap on BHP, if we look back at the performance of the algorithm signal, so we had the downtrend here, move to higher highs, higher lows, and we've gone from sell conditions into buy conditions, and the stocks continue to perform well. So again, what we're doing now is just toggling through the last 30 days of stocks that we've posted on the blog. So highlighting here that CBA's got the lower lows, lower highs. Whilst it's tempting to buy into these banks after a 20 to 30% correction over the last couple of years, for us it's still a little bit too early, and we're a bit concerned that we get another rollover under this recent resistance. But maybe into the back half of the year, early next year, we see finally a shift from these sell conditions into buy conditions, but we're just not there yet. CIMIC Group. So this was one of the high conviction ideas, and our strategy here was to get set as as a buyer of CIMIC ahead of their earnings release. And when that number came out, the stock jumped 20%. So it was a really good outcome for one of our high conviction ideas. So our strategy there was we started accumulating CIMIC at around this $42 level, and we've now taken profit. The theme that's helping to drive CIMIC is obviously the pipeline of infrastructure projects, both public and private, that are taking place here in Australia, which should underpin CIMIC's earnings for the next sort of 3 years at least, and we'd expect the company to deliver sort of 10 to 12% earnings growth per annum. Now, where it sits at the moment, it's on a 3.3% dividend yield. So I think for the moment, most part of that good news is priced in, but you want to keep an eye on this. If we were to get a bit of a sell-off in the US market over the next month or so, any opportunity to pick CIMIC up, at around this $46 level, for example, would be very good buying. Charter Hall, this was one that we commented on the blog, just that we thought that this sell-off was getting a little bit overdone. The stock delivers about a 6%, 6.5% dividend yield, so well supported there at $4, but at around $4.25, $4.30, maybe even filling the price gap up to $4.35. We think that sort of recovery there is done. It was really just an oversold opportunity. CSR might be a little bit a similar situation. We've got an oversold opportunity. We do have some concerns around the weakness in US housing data that started to show up in the month of June, and obviously we know the issues here domestically. But with the stock now down on about a 6% dividend yield, flat earnings growth over the next 12 months, maybe we can see it recover back up to around $4.50 thereabouts. Caltex, we think this is pretty full value here at $32. Our strategy was, if you own it, sell covered calls over Caltex. CYB, add this one to your watch list. They've acquired Virgin Money in the US. In the UK. I think it's a bit of a game changer. You just need to be a little bit cautious around Brexit in March there as an approximate timing. But we're yet to know how that fully plays out. But the way that I'm approaching CYB is, if we get weakness in the early part of the new year because of Brexit, and you're able to pick this stock up back at sort of $5.50, I think that's really good buying with a sort of 1 to 2 year outlook from there. Downer EDI, so add this one to your watch list. So this is a beneficiary of that infrastructure theme, just as CIMIC has enjoyed. Downer EDI, I don't know if I've got their date handy for when they report their earnings, but I'll update that on the... yes, okay, here we go. So make a note of this. On the 16th of August, Downer report their results. And my expectation is that Downer's in an earnings upgrade cycle where they too enjoy sort of that 10% earnings growth. The stock's on about a 4% dividend yield at the moment. So any chance to buy this prior to the 16th of August on any pullback. So maybe, I think it's okay value buying it at the moment, but obviously it'd be great to pick it up at $7.25, for example, on some weakness if we had a couple of days of selling in the US market. But so Downer goes on to the high conviction list coming into that earnings result on the 16th. Evolution Mining, I spoke on that one. We want that one's hasn't yet made it to the high conviction list, but we want to try to pick that up at around that 275. Fortescue, we've covered that a fair bit on the blog. Healthscope, I think long term this is a good buying opportunity. Mindful that there's a price gap down to sort of 210, but this stock, they knocked back a takeover offer, I think, of around $2.50 a share. So I think this sort of disappointment that they haven't proceeded with the takeover is weighing on the share price, but ultimately there is good long-term value here in Healthscope. Insurance Australia Group, this is really just a buy it here, sell the 8.25 European call, strip out the upcoming dividend, you're generating 10 to 12% cash flow plus franking credits. Incitec Pivot, I like this company long term, just mindful that it's got this lower low, lower high structure, so we're just watching to see whether it rolls over under that 380 there. James Hardie, this is under pressure following those weak housing numbers in the US. Link, this was one of the high conviction ideas. We had buy down here at around $7. It's rallied back up to $7.80. I think now just need to be patient and wait to see whether we get a correction back down below $7.50, and then we would add that back to the high conviction list. New Crest we like, covered that. Northern Star, not really doing there at the moment, nor in Ocean Gold. Media, so we had this support level here at around 459. I posted it on the blog, and we've had that technical bounce there, got price gap up to around $5. Not really one of our core holdings, though. Origin Energy, where we know earnings are likely to be, the stock now trades on about a 4% dividend yield into FY19. The company should start reinstating their dividend, which that'll be announced in the August earnings result. Buying it here, selling covered calls up at around $10. I think the downside to Origin's fairly low at the moment. Oil Search, not doing it there at the moment. So Oil Search and Santos were added to the model portfolio, and I'll just jump in and show you this. So if we click on model portfolio, go to ASX top 50. If we have a look at sort of by days held, so all I've done there is get the least number of days held to the top so we can see what's recently been added. You can see there New Crest has gone into the model. If we just come down here a little bit, we can see earlier this year in February, Santos and Oil Search were added to the model. And if we go across and look at the performance of those stock, Oil Search is up 20% and Santos is up 32%. So if we just go back and click on the chart, so this was the period here where Oil Search was added into the model, and the stock's done well, but I think it's pretty close to the top end of the price range at the moment. Qantas, and in the model as well, this is performing well, but our strategy here was just highlighting that we had the algo buy signal here around $6.10 and the stock $6.75. Just remembering that what we're toggling through now is the list of stocks that we've posted on the blog recently. AMP, this is the worst performing stock in the model by a wide margin, but I do think there's value here. We would expect to see some strategy outlined by the CEO, and I think that might ultimately lead to sort of a separation of assets within AMP, where they create sort of maybe a new company and house some of the faster growth products into that company and sort of keep the advisory side business separate. But it's hard to sort of know when the inflection point for that is. I made a post on the blog today about that, but it looks to me that there's value there even on a breakup kind of analysis of AMP. Medibank Private, we had a buy alert down here. This is one that we were advocating as a good opportunity in the market. It's rallied, so we've started taking profit at the end of last week or selling calls over this name. I don't think it's got any more upside in it. And the concern there with Medibank is that in their last two earnings results, they've showed very limited revenue growth. So we're cautious on the stock trading too much higher than what it is at the moment. Fortescue, I think there's reasonable value starting to turn up here in Fortescue. Rio Tinto, so this is earnings result on Wednesday, and I expect Rio to probably surprise the market with the extent of their share buyback. So holding Rio here ahead of Wednesday's result makes sense. Origin I've covered. BHP we've covered. Insurance Australia we've covered. ASX, I think this name's just getting expensive at the moment. Wesfarmers, we've got the separation of Coles and Coles and the sort of more traditional Wesfarmers or Bunnings business. That'll probably finalise towards the end of this year, early next year. But I think for the most part, Wes is pretty full value where it is at the moment. Let me just make sure. Recent blog posts. Just making sure that we're going through the right list there. So CSR we covered. Caltex we covered. CYB. Downer we covered. So I just catch up to where we were there. Fortescue, Healthscope, Insurance Australia, Incitec. Here we go. Oz Minerals. So we had the algorithm buy signal in Oz Minerals around 8.85. That's pushing 9.52. I think full value for Oz is around $10. Qantas we've covered. Ramsey Healthcare. So we had this in an algorithm sell signal after being in an uptrend through to say 2017. It's now rolled over and made lower lows and lower highs. The company's gone from growing earnings about 8% to probably something more in the order of 4 to 5%. The stock's now on roughly a 3% dividend yield, which starts to make it look a little more attractive. I'll just confirm. Yeah, on forward earnings, it's on 3% yield. So my expectation is that it's at a support level where it really bumps sideways. But I think we'll watch this one over the course of the back half of 18 just to see if we get a little bit deeper sell-off and the beginning of a higher high, higher low structure, at which time you'd want to look at adding that into the portfolio. South 32, don't mind this name, but again, view that commodities are pretty close to full value, so you want to be selling covered calls, I think. Saracen, just keep an eye on this. Maybe a pullback to around 175 might be a good opportunity there. Some Barbara Mining, I think maybe back down for around 365 or just below $4. Keep that one on your watch list. Spark Infrastructure. So this is a name that I've been chatting about. We're looking for support to develop around this 220 level and for it to push a little bit higher, about 240s full value. Santos, so this was added into the model portfolio in February. It's up around 30%, but at around 630, 640, I think this is full value. My preference is Origin over Santos, but if we were to see a sell-off in Santos back down to around $6, happy to take a look at that again. Sydney Airports, I think this is just a buy right, so own it here, go out to March, sell the 725 call, and you're stripping out about 50 cents in option premium, plus getting access to the December dividend there. Tabcorp, so we really like this. This is on the high conviction list. Make a note, the 8th of August is when the company reports its earnings. It'll be the first 6 months where we see Tabcorp combined with Tats, and we think that'll be bullish for the valuation, and we're looking for that to trade up around $5. Pleased to see here Telstra starting to have a little bit of a bounce from obviously very oversold conditions. Woolworths, my comments here have been keep this one on your watch list. So we know that Woolworths is doing a good job of turning around the business after getting rid of the Masters assets and focusing on the food and liquor business, but at 24 times earnings, the stock's expensive. It needs to pull back to around $29, at which time I'd encourage you to add that into your portfolio. So there's a couple of stocks that are not quite at a high conviction buy level yet that were on the watch list. So let's just make a note of Woolworths is one of those, and the other one I think is EVN, Evolution Mining. Woodside, just mindful that it's up against resistance there at around 35, 36, and there we are back to the beginning of that list. So I'll summarize these ones at the end of the recording, but let's just go in here now on the watch list. Let's click on the US and have a quick look through the Dow 30. So we come into the watch list, select Dow 30, select the first stock in the list. Up on screen is Apple. So I spoke about the sell-off in the technology stocks. You can see that there. You may have read that Berkshire Hathaway has been building a big stake in Apple. It's gone from sell conditions in 16 to buy conditions in 17 and 18. So we'll just keep an eye out on when we next see these buy signals. American Express has done well off the recent algo buy signal. Boeing likewise has done well off that buy signal. Caterpillar, we've seen this correct off the back of mainly concerns around the impact that trade tariffs will have. Cisco Systems, so it's really supported around this $40-odd. What caused the recent spike lower there in Cisco was the announcement by Amazon that they were looking at selling routers, or essentially selling Cisco's products, competitive products, which would obviously impact Cisco's future earnings. But Cisco is a really interesting company, and I think that's likely to be a strong performer over the next sort of 5 to 10 years. Chevron Oil and Gas, not doing there at the moment. Disney, we've seen them proceed with the takeover bid for Fox assets, and that paid record price and beat Comcast on bidding for those assets. So Walt Disney as a company starts to sort of change shape a little bit over the next really sort of 1 to 5 years off the back of acquiring those assets. So we've got lower low, lower high there in Dow Dupont. Goldman Sachs, this is one worth just stopping to have a look at. So it'd been sold off from $275 down to $225, starting to bounce. I think we see that push up to around $250. Home Depot. Look, I appreciate not everyone has an interest in these US stocks. I'll move through these fairly quickly, but I just find it interesting. These are the 30 biggest companies in the US, so it's worth just having a look at these trends on occasion to see what's happening. IBM, so this is an old legacy style business that's trying to transform into cloud and subscription type services. And they're trying to grow those new revenue streams faster than those old legacy ones fall away. So it's having trouble creating higher highs and higher lows, but it is under an algorithm buy signal at the moment. So we'll watch with interest over the next 6 months whether that 145 holds as support. Intel, under algorithm buy signal at the moment. Johnson & Johnson, so we'll just shift that resistance line up there to reflect that we've got an algorithm sell signal in place, and we'll continue to keep an eye on that. JP Morgan, so here's an example of where the big global banks now starting to come up under sell signals as well. Coca-Cola under sell signals. McDonald's, so we had the sell signal there at around 170, and it's fallen away off the back of a slightly disappointing earnings result last week. 3M under buy conditions, so we got this at supported around 190. Merck & Co, so under resistance there. Microsoft, what a terrific rally this stock's had. So if we go back and look at it, it shifted from sell conditions into buy conditions in early 2016 at around $50 a share. And the stock is looking pretty expensive up here. This is sort of one of those overcrowded technology trades, and will be interesting just to see what type of correction eventually occurs here and when we get the next algorithm buy signal there. Nike's done very well, switch from sell conditions to buy signals from 52 up to $80. Pfizer again switched from sell to buy conditions here, rallied from 30 up to 38. Procter Gamble under sell conditions at the moment. Travelers Insurance, so buy conditions here at around 120, so that'll be an interesting one to revisit in the months ahead. And United Health, this has been a strong performer over the last 3 years. If we go back to the original algo buy signal here at around $53, and the stock now pushing $255. Same with United Technology, went from sell conditions into buy conditions early 16 at $100, now trading 134. Visa's been a strong performer. Verizon, so we had the algo buy signals at around $45, now pushing 52. But generally in the US, the telecommunications sector struggle as well. So AT&T, for example, has underperformed. Walmart, so support here at around this $82 level for Walmart as they start to fight back against Amazon with a better online portal offering. ExxonMobil, so we'll just shuffle that resistance line down there. So it's interesting that some of these energy names is also having sell conditions in them. So I just thought I'd show you those US stocks, and just to tie that back in, if we have a look at the indices for the US companies, so this is just bringing up a graph of the Dow Jones. So this is where we're at the moment. We've had that sell-off. We've had a little bit of a recovery in the market. But, when you think about sort of most of those large energy names had sell signals, most of the banks had sell signals, the technology companies look a little bit stretched. It's hard to see the index really pushing too much higher. All right, so let's finish with a quick look at maybe just the ASX top 20, and then I'll recap on the high conviction ideas you want to be looking at. So let's just move through these pretty quickly. Amcor we've covered. ANZ under resistance there. BHP had a good run, but I think fully valued for the moment. Brambles up against resistance here, lower low, lower high. CBA, common with all these banks at the moment, we've got these algorithm sell signals. CSL, crowded trade for the ASX and looking expensive, trading about 36 times earnings or something in that order at the moment. So looking expensive and a crowded trade. I think this has limited downside risk, so we like Insurance Australia as a covered call strategy. Macquarie Group, terrific earnings. They've grown from 2 billion 2 years ago to 2.5 billion now. So the earnings growth supports this rally, but I actually don't mind Macquarie and Goldman Sachs. I think they've still got a little more earnings support at the moment. So NAB, lower low, lower high. And just a bit cautious, really, on these banks at the moment. Origin Energy, we like this name. Good buy, right? Rio, we like this coming into Wednesday's earnings results. South 32, we see support at 350, but you want to be selling covered calls over it. Yield-sensitive names, not uncommon to see sell signals at the moment in some of these yield-sensitive REITs and infrastructure stocks, etc. Suncorp, I think this is expensive, and if you're looking for shorting opportunities in the market, I think Suncorp makes the list there. Transurban, I just pointed out that some of these infrastructure stocks have sell signals, so there's an example there. Telstra, given that the plans laid out and the separation of the infrastructure assets occurs in roughly 2 years' time, maybe we've got the low in place for Telstra and we gradually see it push back up towards $3. Westpac, lower lows, lower highs there, bit of a concern. Wesfarmers, full value, wouldn't take another look at this until post the breakup and the spin-off of Coles. Woolworths, not yet on our high conviction list, but if you see it down at around 28.50, I think that's a really good buying opportunity. Woodside, full value. The index up against resistance and struggling against those valuation issues that I highlighted earlier. So let's just recap. These are the ones that hopefully you've got down. A2 Milk, let's just keep this on the watch list and see if we see the price trade down around 880 in a weak market. I think it finds support when it fills that price gap. Crest Mining, we like. I think after 2 years consolidation, support here at around $20, run a stop loss below, say, $19.50, but looking for this to eventually break into that $22 to $25 range. Downer EDI, coming into the earnings result on the 16th. I think that earnings result pushes the stock higher. Would be nice to pick it up at around $7.25, but still good buying where it is at the moment. That's on the high conviction list. A couple that have been on the high conviction list from prior week recordings, Star Entertainment, just to confirm when we see their earnings result. That's going to be the 24th. So, I think the upcoming earnings result, we could see Star up at around 550. Keeping in mind the Chinese only put $410 million into it only a couple of months ago at $5.30 a share. But I think Star's undervalued where it is at the moment. So that's definitely on the high conviction list. Tabcorp, high conviction list. Think this trades maybe 5 to 520 off the back of the earnings result on the 8th. So that one's on the list. What else do we have from recent? And there's a couple there that I think we've covered already in the recording. Another one, I don't think that's got quite the valuation support as the other names that I've mentioned, but Crown, What I like about this is I think as they've sold off their international assets, I think they've really taken a closer look at the domestic business. I think they're stripping out costs, and we may see a slight surprise to the upside in the earnings here as well. But I don't think it has that same sort of opportunity that, say, Tabcorp or Star Entertainment has. Thank you for listening in, and I look forward to speaking again next week.